So let us now discuss the Finance Commission. We are going to today look into the 16th Finance Commission, which is the latest commission whose recommendations we are going to implement from April. So now Finance Commission related questions we do get in prelims exam. For example, if you look at the Assam Public Service Commission prelims exam, they ask this question: which of the following are constituted by the President of India? Here we have the very first option, Finance Commission. So in this topic, basically we need to ask who appoints the Finance Commission. That is the basic question here being asked in this particular type of prelims examination question. Also, you look at the Assam prelims question point of view. There was another question they asked about the current affair topic of the Finance Commission. So what is the time period of 16th Finance Commission, right? So this kind of question you can expect to come in your prelims exam. Also, if you look at UPSC level questions also with reference to 14th Finance Commission, which of the following statements are correct? They asked about the increase in the share and also recommendations made by the Finance Commission. So what I am trying to communicate to you, you will get questions in civil service examination for this kind of topic of Finance Commission. So now, how do you look at this topic of Finance Commission? So now we have the 16th Finance Commission. So the Government of India constituted the 16th Finance Commission in December 2023. Normally it is set up for a period of 5 years. Okay, so the Finance Commission makes recommendations for 5-year period. Now if you look at this one, this Finance Commission is basically appointed under Article 280, right? Therefore what happens, age of Finance Commission, we normally say the Finance Commission is a constitutional body because it is under Article 280. Now the Finance Commission plays a very important role in the sharing of the finance, and the first Finance Commission was set up somewhere in 1951. That also you can expect in some kind of a statement based questions. Okay, so now let us look at the details about the Finance Commission. So the Finance Commission is basically a constitutional body set up under the Article 280. And as I told already, it is constituted every 5 years by the President of India, and the Finance Commission also makes its recommendations to the President of India. Okay. Now if you look at the Finance Commission chairman, who is the current chairman of the Finance Commission? We have Shri Arvind Panagaria, who is the chairman of the 16th Finance Commission. Okay. Now, to be a member of the Finance Commission, there are some requirements and there are some qualifications, because anybody and everybody will not be appointed to be a member of the Finance Commission. So the first and the foremost requirement of the Finance Commission member, persons who are or who have been or qualified to be appointed as judges of High Court, only they can be appointed in the Finance Commission. Secondly, persons who have a special knowledge of the finances or the accounts of the government. That means how do you prepare the government finance, government budget, government's receipt expenditure, those things, those who have the idea and the knowledge, they have to be appointed in the Finance Commission. The third important qualification, persons who have had wide experience in financial matters and also in administration, they can be appointed. It simply means they should have an experience in public administration and finances of the government. And the fourth qualification, one of the qualifications, persons who have a special knowledge of the subject of economics, those who have done their special studies and understanding of subject of economics. So to be a member of the Finance Commission, a lot of requirements are there. So one has to fulfill some of these requirements to be appointed as the member of the Finance Commission. So now if you look at the 16th Finance Commission and its recommendations, these recommendations can be put under the two categories. The first one is what we call tax devolution. Here we discuss about the sharing of the taxes between central government and the state government. That is the main job of the Finance Commission in fiscal federalism. Similarly, if you look at here, the second important recommendation concerns the grant in aid given by, recommended by the Finance Commission under Article 275. Okay. So now, if you look at here, the tax devolution is normally divided into two parts. So one side we have a vertical devolution, other side we have the horizontal devolution. What is vertical devolution? It is dividing the money, the tax collection between the central government and the state government. What is the horizontal devolution? Whatever money the portion is allotted for the state government, it has to be divided among the 28 states of India. That is what we call horizontal devolution. So now, if you look at the devolution, the vertical devolution. So what is the vertical devolution? How do you understand this part? Vertical devolution, suppose central government has a tax collection, net tax revenue, say 100 rupees. The Finance Commission makes a recommendation saying that how much should be given to center, how much should be given to the state governments. This division of the tax revenue is generally what we call the vertical devolution between the center and the states. Now this vertical devolution is normally recommended by the Finance Commission, and the government generally accepts the recommendation made by Finance Commission. Now from exam point of view, if you look at it, this kind of question came also for the state government exam in Assam. The Union of India accepted the recommendation of 14th Finance Commission for increasing how much the share to the state government. It should be 42 that time. So what is the share of the state government? How much is recommended by the Finance Commission? It will be part of the prelims exam preparation. Okay. So if you look at this one, the vertical devolution, which Finance Commission has given the maximum to the state government? This kind of question you can get in exam. So if you look at this topic, the 11th Finance Commission recommended 29%, 12th Finance Commission gave 30%, 13th Finance Commission recommended 32%, but the big jump comes when we come to 14th Finance Commission, which gave 42%. So the 14th Finance Commission recommended 42% to the states, and the 15th Finance Commission has recommended 41%. Why? Because one state was reduced. Jammu and Kashmir became Union Territory state. So 1% was also therefore reduced from the Finance Commission grant the recommendation of share of the state. 16th Finance Commission also recommended same, that is the 41%. Okay. So what is the share given by the Finance Commission to the state governments? It is 41%. Clear? Now look at the horizontal devolution. What is the horizontal devolution? It is the share of the states. So this 41% which is given to the states, it has to be divided among 28 states of India. So should we give an equal share to every state? Answer is no. We cannot give an equal share to every state. Therefore what happens? The share of the state governments will be decided by the Finance Commission based on certain formula. So if you look at this one, this is the formula given by the 16th Finance Commission at present. Okay. Now, how much money a state will receive depends on these criteria. Okay. So if you look at this criteria, population 2011, for that 17.5% is recommended by the Finance Commission. That is the weight given. Demographic performance basically refers to the decrease in population compared to the earlier population what they compared 1971. Now they are also comparing with 2011. Okay, that is the demographic performance, whether your population has increased or decreased. Area refers to size of the state. Bigger states will get more funds, smaller states will definitely get a lesser quantity of funds. Forest cover was also earlier introduced by the 15th Finance Commission, discussed by 14th Finance Commission, but the 16th Finance Commission also keeps the concept of forest cover with a little modification, and 10% is given to the forest cover kept by the state. Okay, they are also talking here, the interesting thing is whether the forest cover has been increased by the state. That is also calculated in the forest cover. Per capita GSDP distance, this is the very important one. If you see, the highest amount of money, share of money is given for this particular criterion. It means what is the difference between the rich state and the poor state in terms of per capita income? If the per capita income between the rich and poor state is a huge gap, then the poor state will get more money. Follow? So the poorer the state is, the more the money will be given to the state. That is the idea of per capita GSDP distance. The last one, contribution to GDP. This is the new concept introduced by 16th Finance Commission. Okay, so your exam you might get a question, which of the following is newly introduced by 16th Finance Commission? The answer will be contribution to GDP. It's totally a new concept introduced by the 16th Finance Commission. It simply means, suppose if India's GDP is 100 rupees, what is a particular state's contribution to that 100? Whether it is 1 rupee, 2 rupee, 5 rupees, etc. Follow? So this also important, because what is the contribution given by the state to India's GDP, that is estimated. Now if you look at carefully, using all these criteria, the Finance Commission recommends how much money should be given to a state. This concept is what we call horizontal devolution. Clear? So from your exam point of view, we have to be familiar with all these criterion, because each of the criterion is important. So totally we have 1, 2, 3, 4, 5, 6 criteria. Okay. Now if you look at the exam perspective also, in UPSC for example 2023, this question came, consider the following, that is the demographic performance, forest and ecology, governance reform, stable government, tax and efforts by the government. Out of all this, for the horizontal devolution, so the question was basically targeting horizontal devolution. So the 15th Finance Commission used how many of the above as criteria other than population, area and income distance. So now if you see, we cannot answer this kind of question unless you know what are the individual criterion and what is the total number of criteria used by the Finance Commission. Okay, therefore I am telling we have to know this table for giving an answer to this kind of question. So this table will be very important for our preparation. The last part of the Finance Commission recommendation is called grant in aid. Now there are two types of grant in aid recommended by 16th Finance Commission. One is called grant to local body, other one is called disaster management grant. Now grant to a local body, what does it mean? So if you look at the local government, local body, we have two types of local government in India. One is what we call urban local body, other one is rural local body. The urban local body has municipal corporation, municipal boards, town committee, and the rural local body has Zilla Parishad, Anchalik Parishad, Gram Panchayat. Okay. Now the Finance Commission recommends money to the both rural and urban bodies. Suppose now one question to you. Which local body gets more finance? Urban or rural? So the answer will be rural local body receives more funds recommended by the Finance Commission than the urban. Clear? Now let us look at the difference between the Finance Commission 14, 15 and 16. 14th FC, 15th FC both recommended grant to local body. They both recommended grant also to disaster management. Okay. And they both recommended revenue deficit grant. But there is difference. Sector specific grant was recommended by 15th Commission, but it was not recommended by 14th Commission. Okay. Similarly, state specific grant was recommended by 15th Commission, but it was not recommended by 14th Commission. Clear? So 15th Commission recommended 1, 2, 3, 4, 5 types of grants. 14th Commission recommended only 3 types of grant. And now coming to 16th Commission, it recommends only 2 types of grants. Which are the 2 types of grants? If you see here, there are only 2 types of grants recommended by 16th Finance Commission. One is the grant to local body, other one is disaster management grant. Clear? So we have only 2 types of grants recommended. Now look at the question from exam perspective. UPSC 2023, this question came with reference to the 14th Finance Commission. Which of the grants are correct, statements are correct from the recommendations made? So the first one, it increased the share of the state to 42%. Yes, that is correct. It has made recommendations concerning sector specific grant. That is not correct. So the answer would be only one is correct. First statement. Second is wrong. Therefore, answer will be A, only one. So to know this kind of things, therefore, I am telling we need to know which are the grants recommended by 14, 15, 16. So 14 recommended 3 grants, 15 recommended 5 grants, and 16th FC recommended only 2 grants. Clear? So now exam preparation therefore becomes very important to pay attention to this kind of minute details about Finance Commission. Okay. So today we discussed what is Finance Commission, when was it appointed, who are the chairman of this commission, and what are the qualifications for the members, and what are the major recommendations made by the Finance Commission, etc. Now each of these will be important for your prelims exam preparation. Okay. If you need any further information or any further help for your preparation, you can contact Bhadra IAS Academy at 8638391721. Okay, so you can contact us at 8638391721 for any further query. So till then, you keep preparing for your exams, and we will come out with more topics for your exam preparation. Thank you.